Silvers of the world are on the other side.
That's right. Here we are. We're looking at, yes, I'm on live on the tape, and they will be tortured if they don't sell. You're right, Ronnie. They got to know when to sell bull rallies and when to buy bull rally pullbacks and bull cycles. But then when we get to a major top, this is called the Internet Index. Say Internet Index. And it's the IIX.X Amex Interactive Week Internet Index. But let's take a look at something. These narrow range monthly price action bars for 2011, people are very uncertain because whenever you have a top resistance, and these are the culprits right here. These are the stocks, Akamai, Amazon, you got Broadcom, you got some really good names in here. But then again, you're overbought on the index on a monthly level. I'm sorry. I'm calling for a correction as I have on many. And over the next 90-day period, some will correct. Some are going to correct more than others in individual names. And the thing about it is, there are some really good names in here. Netflix, Priceline, Qualcomm. Guess what else? Amazon. Okay. Checkpoint Software. eBay's done well. There's a lot of them in the index here. And these are all the names. And those names are the ones that have put in multi-year bull rally tops. There's 2009 breakout, 2010. But here's the problem, is there's not enough catalyst. And I'm calling for a correction because the longer that I can't take out tops and the narrower the monthly ranges are, that's called indecision. This here, people are on board when you got big monthly breakout bars like this. People are not indecisive then. They're clear about what they want to do. And that's what these, and when you're coming toward a trend on a monthly level, is that people were clear about what direction they were wanting to go through here with the bigger, greater monthly buy bars. The thinner that they get at the top, the longer they can't break higher, then we're going to come down and test the 10-month moving average. Bull rallies have short-term bear corrections. The leadership names with good fundamentals and good earnings in here and good yield that continue to do well in the economic cycle. But seasonality-wise, there's some weakness in the names that bring the index down. Once again, it's always pinpointing the name. Okay? The better names that pull back on monthly levels are going to bounce first in these long-term bull cycles. So that's the index. Correction coming. Starting now, as it has in the month of May. What we'll look for is how we take out this low where they bought here. Off the bottom. So it's going to be the bottoms right here. Across here is our primary focus for the depth of the correction. That's going to be coming off right there. When I come down here and I test it, in bull rallies, you come down and test and you bounce. And that's how bull rallies versus bear rallies work. So there's a time factor and seasonality factor and weakness, and we've done well for 24 months. Why do we have double yearly breakout patterns in all of these? I can tell you why. Because when we got down to the bottom, we had the earnings coming up. We hit the bottom top of the earnings 1 year. We had a second year of good earnings. We've had a 24-month good cycle of good earnings to support in all of these indexes and these great bull rally names, is that they've done well on the top line and bottom line, and their earnings have been good. However, why am I calling for a correction? Part of it's seasonality, and the other part is that the top line with commodity and energy related costs to some of the way that these plants are run and the way that some of these internet names are going to have to absorb costs, they are doing well. Correction.